Hello, everybody. Hope all is well. It's Will here. Welcome back to another episode of the Blockware Intelligence YouTube channel. This week, as always, we're going to be going over some market trends, and our podcast will actually be out either Saturday or Sunday. This week, we've actually got two really special guests. We've got Checkmate, who's the lead analyst at Glassnode, and then also a good friend, TXMC, who actually just got hired on at Glassnode, and we basically just talk all things on-chain. So looking forward to that being released. But yeah, let's go ahead and get into this week's market overview. So this week we had a special guest writer, Nick Bhatia. Nick wrote a book that I can vouch for, and a lot of people in the community will vouch for, Layered Money, which it's really excellent. But he put in a macro overview for this week. I don't want to speak for him, but he touched on some of the stuff that's going on, with the dollar, and then also touch on tapering briefly, and then also what's going on in China. So be sure to check that out, kind of get a good perspective on what's been going on there. From an on-chain perspective, I kept this week's letter a little bit more concise because we actually hit the word limit on the newsletter for the week, but touched on a couple key things for you guys. So first of all, here's our URPD chart, and this is basically like on-chain volume profile. So it's segmenting different amounts of volume, of on-chain volume, into different price levels. So you're basically seeing how much of Bitcoin's money supply has moved at different price levels, right? And so what we see here is we kind of have four really distinct clusters of volume. We have one, which is kind of like the pre-bull market cluster between, call it 3K and about 11K. We have one while we were consolidating from May to mid-July between 30 and 40K. And then also we have the current cluster we're in right around, call it 43 to 49K. And then above us, we have one final cluster, smaller cluster between 53 and 60K. And so last week, as we were kind of edging up towards this upper cluster, we actually kind of got rejected. Whereas, as we just mentioned, it started right around 53K, and that's where we actually got rejected. So now we're back in this, third cluster over. We actually are currently sitting on the largest bar of on-chain volume since about 9.5K, call it. So you're seeing a lot of market participants entering their cost basis here in this range. So let's go ahead and move on to here. We have our supply shock ratio metrics. So here we have, as always, the liquid supply shock ratio, which measures the movement of coins from weak to strong hands. And so the way I'm looking at this is Glassnode has highly liquid, liquid, and illiquid supply. And so highly liquid coins are entities that are selling over 75% of the coins that they take in. Liquid entities are selling more than 50%, and illiquid less than 25%. So the illiquid guys are really taking in a lot of coins, not moving many out, right? And then you have the highly liquid guys on the other side of the spectrum who are taking coins in and moving them out all day long, right? These are like the speculative traders. Exchanges fall into the liquid category, by the way. And so when we take the ratio between the two, we get our liquid supply shock ratio. This is the metric that me and Willie kind of used to call the reversal down at 30K, because as you'll see, I think you can see my cursor. You'll see we kind of had this bullish divergence where the metric was slowly ticking up from mid-May to really kind of ramped up into mid-July, while at the same time price was kind of bleeding sideways bearish. And so at this time, especially once we got this impulse here on like right around June 28th, that impulse to me really kind of signified that we were going to see a reversal. And then we ended up having like 10 straight up days, I remember, off the lows. And then also here in the red, we have our highly liquid ratio. So this is tracking the movement of coins from highly liquid to liquid entities. And so basically like the movement of coins from really speculative in and out investors to what appear to be short-term investors, right? Because we just talked about the classification of these investors, these liquid entities, are taking in and spending roughly 50% of their coins versus highly liquid is 75%. And so seeing the movement of highly liquid to liquid entities is obviously a positive thing, but we want to see that translate into this blue line. So we want to see that translate from highly liquid to liquid and then translate from liquid to illiquid. And so we have been seeing some translation of that. You see we had this impulse here, And then now we've got this impulse over into illiquid. So want to see more continuation of that as coins begin to move into these what resemble as strong hands on chain, I like to call it. And then we have this purple line here. This is the exchange supply shock ratio. So this is just measuring the amount of coins that are available to be bought on exchanges relative to the amount of coins that aren't available to be bought on exchanges. So not against circulating supply. So this isn't just the percentage of exchange balances relative to circulating supply, because when you're doing that, you're also dividing by exchange balances inadvertently, right? So what this does is you're subtracting exchange balances from circulating supply to get the coins that are not on exchanges. And then you're taking a ratio of exchange balances to that amount, to that amount of coins that aren't on exchanges. And so what you see is that, and this is just another way of looking at the fact that coins are moving off exchanges, by the way, you're seeing a steady uptrend in that too. And so this week, roughly $1.25 billion of BTC were moved off exchanges, which is 26,148 coins. So we're really honestly seeing no slowing down in this trend. This is showing that we're seeing continued accumulation, right? So obviously would want to see this continue. And next up, we have our whales holdings. So what this metric is doing is it's taking all the entities with over 1,000 BTC, which are considered whales, and then we're filtering out all the known entities. So we're filtering out Grayscale, the Purpose ETF, QBTC, and then most importantly, exchanges. And so the reason this is important is because if you haven't filtered out for exchanges, and you see what appears to be coins moving into whales holdings, it could actually be coins moving onto exchanges because because exchanges are recognized as whales, right? And so that's why I filter out for that. And so what you basically get is just the raw balance of BTC whales. And so this week, whales have added another substantial portion of BTC, especially yesterday. You saw this large uptick here. Since July 17th, which is exactly 2 months ago, you've seen whales add 184,699 BTC, which is roughly $8.8 billion at current prices. So I used just $48,000 for the price for that calculation, but 184,699 BTC. And so we're continuing to see long-term holders increase their holdings as well. And this is something that we've been tracking, continued all-time highs in terms of the raw number of BTC that long-term holders possess. But this suggests, once again, that we're seeing continued accumulation. And the reason that this is really important to me is that when you see long-term holders holdings increase, that's not just saying that long-term holders are buying coins today. It's also mostly just coins maturing past the 155-day threshold or 5-month threshold. Because that is statistically, based off of some research that Glassstone's done that's on their website. Once coins aren't moved for that certain amount of time, held by entities for that amount of time, statistically, the likelihood of those coins being sold, just drops off dramatically. So starting to see those coins moving past the 5-month threshold here is really interesting, because when we go back 5 months ago, that would be May 17th, which is, of course, 2 days before we had our massive drawdown to 30K initially. And so to me, this is showing that you have market participants that came in, bought BTC before this large drawdown, and are actually holding the whole time, right? They held through this whole little mini bear phase, if you want to call it that, and they're holding strong. So seeing long-term holders holdings increase, and then also when you look at like realized HODL waves, which I didn't include some of these charts because I had to keep it concise, because like I said, we actually hit the limit for words on this newsletter. But if you look at realized HODL wave, you'll also see the maturation of coins, right? You're starting to see coins move from the 1 week to 1 month threshold, 1 month to 3 month threshold, 3 month to 6 month, and then now crossing over that 6 month, which is the closest you can get it to the 5 month cutoff for long-term holders. Point is that you can slowly see these coins maturing into that 5 month cutoff for the long-term holders. And so it's been quite incredible to see a lot of these coins that were their cost basis was back before we had this major drawdown, and they continue to sit strong on those holdings. Another thing to look at is some of our, age-related spending metrics, such as like our spent output age bands, our spent volume age bands, coin days destroyed, dormancy, liveliness, and then also what this is just arbitrarily, I just chose to include this one in because I don't think I've put this in the newsletter for a while, ASOL, which is average spent output lifespan. And so like you need to use these all in tandem because, for example, like average spent output lifespan is just looking at the average, just the average age of the coins moving, but also like the spent volume age bands, that's looking at the actual amount of volumes like spent by each different cohort. So, if the average age of the coins is going way up, right, and like it appears by that standard that you're having all these older coins being spent, but they're spending 0.001 BTC, that's irrelevant, right? So you need to look at these things in tandem to kind of get, and paint, a more accurate picture, nuance, yada, yada, yada. But what we see here is that we've actually got the average spent output lifespan metric declining. And so what that's showing is the average age of the coins that are being sold has been declining over the last, call it, week and a half or so. And when we kind of plot this out, what you'll see is that as a general rule of thumb, when you have older coins being spent, so more experienced market participants selling their coins off, that tends to be associated with where we kind of have these corrections, right? And then also when you see decreased spending of long-term holders. So when you start to see the younger coins take up a larger percent of overall outputs, then that tends to mark, relatively somewhat of a bottom, right? And so you'll see these green highlighted zones. This is where the metric is declining, which means that long-term holders have decreased the amount of coins that they're spending. And then you'll see here with the little red highlighted areas, this is where you're starting to see an increase in long-term holders selling off. And so you'll see here, we had this increase up to here, this little peak, and then now we've had this decline here. So you're starting to see, long-term holders kind of just sit tight, and perhaps this is, showing that they're expecting more upside, right? Next up, we have our funding rates. As promised, we're going to touch on some derivative stuff every week. After resetting to negative last week, funding is returned to positive, although it's not nearly to the levels that we kind of reached prior to last week's liquidation cascade. Futures open interest has also recovered by roughly $1 billion, but it's still $3 billion off from last week's highs. So, overall, it looks like the futures market, it's still somewhat bullish, but it also looks cautious, right? So this is just something that we're going to need to keep an eye on over the next couple weeks and just see, if funding goes insane, futures open interest goes insane, and perhaps we get some kind of short-term pullback, right? But this is mostly to expect some of these more short-term price fluctuations. For the macro structure, looking at just these on-chain fundamentals, especially these supply dynamics, I think it's very telling for suggesting that we're going to see continued upside for the coming months or so, right? Towards the end of the year, towards Q1 next year. And so on that note, lastly, I've been trying to incorporate like a macro chart every week to just kind of get people to zoom it out, right? Because, especially like, for example, last week, it's easy to get caught up in these short-term price moves. But zooming out and looking at, the broader structure, in my opinion, these supply dynamics are like, undeniably bullish, right? And so what we have here is the supply held by retail. And so if you want to go back on like previous letters, I put several other of these more broader metrics. I just didn't want to include the same ones that I've been including previously. But what this one is showing, excuse me, I'm still getting over my cold. What you'll see here is that kind of in like the middle of each bull market, you start to see a pretty substantial increase in supply held by retail. And so I define this here as entities with less than 10 BTC and then dividing that by overall circulating supply. So you're getting the portion of supply held by retail. And so what you'll see right now is that we actually have just started to see this big uptick, right? And this has been going on since kind of mid-May. And when going back historically looking, 2011, early 2013, into the second double pump in 2013, and then also into 2017, and then in the mid part of 2017, you saw very similar behavior from retail. And so as Willie likes to put it, retail really kind of drives the middle of these bull markets. And so, pairing this with things like, We have our a liquid supply RSI showing that we have like a macro supply shock. Looking at the behavior of long-term holders, right? Taking our ratio of long-term holders to short-term holders and seeing that we're also entering a kind of zone of supply shock that historically has caused pretty substantial upside over the coming months. I think from a macro perspective, OnChain is pointing to, very much more continued upside over the coming months. But for the short-term price fluctuations, obviously you want to keep an eye on price structure, and then also some of the derivatives data and macro too, right? For that, I'm no macro expert. Go back and read Nick's section on what's going on with macro. But given that we don't see any kind of extraneous factors from macro, I think we're set up for a positive next couple months. Don't forget also at the bottom, we have Bitcoin related equities written by Blake Davis. Just don't want to speak for him on that, but be sure to check that out as well. Looking forward to touching base with you guys next week, and be sure to check out that podcast with Checkmate and TXMC. Should be out either Saturday or Sunday, but that was a pretty awesome conversation. So anyways, thank you guys for watching as always. Be sure to subscribe, like, and all that. And take care. Bye-bye.